Welcome back. We are in conversation with British International Investment. Nick, we were discussing the entire sustainability impact as well as the climate change aspect. But you also have a fair bit of investment when it comes to the Indian financial services space, both listed as well as unlisted. What is the thesis behind that? And many of the mid and small cap universe is something that you have been showing interest in. What is your thesis behind these investments, and what have been the kind of return parameters so far have been up to your expected standards?
Yeah, so we have invested, if you look back over the last, I suppose, 7 or 8 years, we have invested extensively in the financial sector. And we use the financial sector, obviously, as a way to intermediate our capital. We lend money to banks so that they can on-lend to try and address some of the developmental issues we talk about. We've talked about it. In fact, we very rarely, probably only one case, I think, where in the last 7 or 8 years where we've invested in a public company. That's not normally what we would do. Now, some of the companies that we invest in, and particularly some of the financials that we've invested in, have become public during our period of ownership. So you obviously then, you end up owning a public company, and over time, our objective then would be to divest in the company. And overall, the returns have been very good over that period of time. We are also, as a development finance institution, very concerned about what we call the additionality of our capital. So by and large, we want to be investing, providing funding where funding is perhaps difficult or sometimes impossible to obtain. That's why, for example, we really don't, or very rarely, invest in public markets. We try to focus on those financial institutions that are catering for less included markets and groups. So we've done quite a bit of microfinance to try to reach down to poorer communities, and we continue to do that through companies like microfinance, for example. We have a strong interest in trying to help extend credit to smaller and micro enterprises. And that's obviously a very vibrant area in India at the moment. A lot of fintech opportunities in the fintech sector. A lot of them are focused on these sort of small, much smaller companies. So so when we think about our finance, our investments in financial services today, those are sort of the areas, microfinance and small and micro enterprise lending, and trying to, if we possibly can, to find those companies that are building new solutions and new ways of looking at credit and new ways of providing credit to reach those sectors.
Right. Do you think that these spaces, Nick, are not invested enough into, and they do require growth capital, especially from a development finance firm like yours? Why does India need the development finance?
Yeah, look, I think that's a very good question. I mean, it is, and it's one that our shareholder, who's the UK government, is obviously very, very focused on. And as I said, we call that additionality. Additionality is not just measured financially. I mean, you can be additional as an investing institution, both by the capital you provide, but you can also be additional by how you work with the company once you are a shareholder or a lender. So we've done a lot of work with with companies on areas like some climate, gender, trying to make them more efficient, try to increase the number of women in employment. So those sort of things also make you additional. And as I said, we don't. When we talk about investing in financial, there's a whole banking sector here that maybe 5-10 years ago perhaps needed capital from organizations like us. Now it's much less necessary. So we've really moved away from those larger banks, certainly listed banks, and the financial services companies that we fund today will be smaller, certainly more risky, certainly trying to reach, often using more innovative methods to reach poorer communities. So it's not the case necessarily that they're going to have easy or certainly not unlimited access to capital, but it is it's often not black or white.
Yes.
There's sort of you have to evaluate very carefully whether or not these companies need your capital and whether or not you'll really make a difference as a shareholder or a lender.
Right, Nick. So you have a very differentiated investment strategy compared to many of those private equity firms. And you did mention certain pockets of financial services also, which are left uninvested, and therefore you're providing them the growth capital. I want to understand, currently, India is one of the attractive investment destinations for the rest of the world. Has it changed your strategy for India? Are you more euphoric? How much are you looking to invest in the next near term of, let's say, 1.5 years? And at what pace has it increased over the years? Has it changed? Has the mindset changed towards India in the recent past?
Yeah. No, I think, look, I've been coming to India for 25 years, and I've seen, and always was sort of within the financial sector, and seen the most extraordinary transformation in this country, well, across the board, but particularly in capital markets. And even I've had my current job at BII for 7 years, and even over this 7-year period, when I compare when I first came to India in the job 7 years ago to now, in terms of the evolution of the domestic capital markets, has changed enormously. The attractiveness of India as an investment destination for large institutional international investors has changed dramatically. So now you've got all the world's large, and I travel in in the Gulf and so on, meet lots of the large in Singapore, meet lots of the large sovereign wealth funds. Everybody's looking to increase over time their allocation to India. And it's like, you've also got many of the world's largest pension funds investing here. So there is a lot of capital. And as a development finance institution, our approach has to evolve. We have to try to, we're not here to compete with traditional, even sovereign wealth funds or private equity funds. We're here to seek out those opportunities that are sort of incremental, that are additive, and that contribute to development. I don't think the amount of money that we have been investing in this country really has been reasonably stable over the last, call it, 5, 6, 7 years, and at around sort of anywhere between $300 and $500 million a year. We have stated publicly that we expect in our current strategy period, which runs from 2022 to 26, so 5 years, to invest $1 billion just in climate finance.
Yes.
So that's, and then on top of that, we'll be doing the other investments in what we describe broadly as inclusion. Some of them will be financial institutions that cater to that market. Some of them will be in areas, and I saw this week actually, a couple of great companies that we're investing in or potentially investing in health, for example, right, in agriculture. So altogether, I think, you'd expect us to continue at that pace that we've had for the last few years.
All right. So very, very positive commentary coming in from you, Nick, about India investments and how you see India as an investment destination. Always a pleasure chatting with you. Thank you so much for your time and insights on your India investments. Thanks, Nick, for joining us right here on CNBC TV18. All right. Lots of takeaways coming in from a development finance investor and also somebody with a focus on sustainability as well as the impact approach on the investments. With that, it's a wrap on Big Deal. Thanks so much for tuning in.